Risk is always an interesting concept. What people mean when they say risk or tech assets are risky, they usually mean to say that they're volatile, meaning that they go up and down quite significantly, right? So if you have, say, a consumer staples company, if you buy General Motors or whatever other stock you want to buy, they go up a couple of percent, get down a couple of percent. But if you hold a Google or an Amazon or whatever, it might go 20, 30, 40% up or down or even more. So, and that's why we have those wild swings. And that's what we say, why we say it's volatile and it's very reactive to the market, right? So if we have a market shock, if we have an inflation, if we have an interest rate adjustment, for example, by the Fed or by another central bank, this has a direct impact to tech stock that is much, much more profound than on other stocks. So they're much more reactive, much more volatile. But risk, in my view, is always made up also of two components. One is diversification, and the other is your investment horizon. Let me say a word about the investment horizon. So, of course, if you tell me you want to invest into a tech stock for another year or two or maybe three, I will tell you it's very risky, right? Because it might go down 50, 60, 70%. Maybe it might go out of business completely because failure rates in tech are higher. But if you tell me that your investment horizon is 20, 30 years, you just want to save up for retirement, then I would say that actually the risk for tech is very, very low because we know that while it's volatile, it goes up much, much more than it goes down over time, right? So it might be down 50% today, but it might go up 200% the next year and so on. And over time, we know that there's less recessions than there's bull runs. The recessions last shorter than the bull runs. So actually tech accumulates and grows much, much more often and much longer than it contracts. And this is why over time, you get the value just going up and up steeper. That's true for the entire stock market, but of course it's even much more true for tech because of this exponential nature and because of this highly volatile and reactive nature. So that's your investment horizon. The other point is the diversification aspect, right? So of course, tech can have a higher risk of individual failure. That's why it's all the more important to have a very well diversified portfolio. And these days, there's no excuse not to have them because we have low-cost ETFs, which are funds that for a very, very small cost just passively buy whatever is in an index, and you can get maximum diversification across the country, across the world, across industries, across company sizes, whatever you have. So it's always very, very important also to diversify and to have multiple pillars of your investment strategy.